Hey everybody, this is Ryan Mallory with the internet's best swing trading service, SharePlanner.com, and today I'm going to be talking to you about the bullish kicking pattern and the bearish kicking pattern. So the nickname for them is like bullish kicker or bearish kicker. That tends to be what I go by, and for this YouTube video, I'm going to be calling them kickers and whatnot. So in any case, let's go ahead and dig right into it here. What I want to do is just lay down a foundation for you, and we'll get to the charts in just a little bit, but I want to just describe to you what it is more from a textbook standpoint. Now, on a bullish kicker, you're going to have, one big, ugly red candle going down, okay? And this is also a filled in body, so we'll just scribble it in there for a little bit. And then the following day, all right, we're going to have this big green candle that gaps above the previous day's candle body, and it runs higher. So what you have here is you have a down day, right? And then the next day you have this huge green body to the upside. And it's usually like a reversal type of pattern. So where I like to see this at a lot of times is like at the bottom of a sell-off. So this is usually a good sign that perhaps a very strong emotional bottom has formed, because it's essentially negated an entire candle pattern right at the open from the previous day. Now your bearish kicker is going to be very similar to the bullish kicker, except for the fact that it's the exact opposite. So we'll draw this candle here. All right, so a full body candle. It starts at the bottom and closes at the top, and then the next day you get the gap down below the opening price of the previous day, and we just fill it right in like that, and opens up at the top and closes at the bottom. And so just like we said, opens higher the previous day, finishes even higher, following day gaps below the previous day's opening price and sells off the rest of the day. Now this is the textbook form, right? But this can take many versions of it, and when you read the textbook version, it'll try to tell you that it has to open at the lows of the day and it has to close at the highs of the day. And in theory, that's correct, but in practice, it's always much different. You're always going to have some shadows on these things. They're never quite perfect. You might have something like that and something like so, or like that and here and here. So you can have some shadows on the chart, and that's not a bad thing. And if anybody tells you differently, they're living in the ivory tower and they're not really applying technical analysis to real life circumstances. So this is what it looks like in theory. Obviously, there's some give and take. I would even say that sometimes you can have a bearish kicker pattern where it gaps up one day, and then the following day you get a gap lower, but it doesn't quite beat the opening price from the previous day, but it's still a pretty notable price. Should we just completely toss this out and ignore it as if it never even happened? No, I don't think you should. I mean, is this right here a textbook bearish kicker pattern? No, but in practice, it should be treated as such. So there is a difference between what you see in theory and how it relates to everything in the technical analysis world and practice. And that's what you got to make sure that you don't do is essentially try to trade according to in a textbook fashion that doesn't realize that in the real world of trading, it is all very much different. There's a little bit of a messiness to it, and you have to account for that. So now you should have a good idea of what a bullish kicker and a bearish kicker pattern is and how they operate, just from more of like the theoretical standpoint. Now let's go ahead and dig into the charts and see exactly what I'm talking about in real life. So the first one we have here is Lowe's Company, and this is a pretty recent one. But when you zoom in, you can see it had this gap up and then this just massive sell-off thereafter, and it created this big time red bar candle pattern. And just like theory versus practice, you do have a little bit of a shadow there. So it's not opening at the highs of the day and selling off thereafter. It's actually opening and going up a little bit and then spending the rest of the time selling off. But the next day you have this huge monster gap higher to where it eclipses the previous highs and opens up and just takes off thereafter. This to me is like one of the best examples of a bullish kicker pattern that you'll have. Now, it doesn't happen at the end of a huge sell-off. I mean, technically you can say it was basing at the end of a pretty significant sell-off going back to the January highs, but it was stuck in consolidation. But this is also a area that I actually do like to see the bullish kicker pattern come out of is a consolidation pattern where the actual strong green bar higher pushes it out of that consolidation, and that's what you have here. It's a pretty promising setup, and then what you should start seeing in the days ahead, you should start seeing more gains pile on. Now this one's early in the development, but you can see that it has had a few good days since that bullish kicker pattern confirmed. Let's go ahead and go to my next chart here, OLED, and what you have here is a huge sell-off back down to the 20-day moving average. It's a big, strong red candle bar, but then the following day, it actually gaps higher. You can see it gaps above the opening price from the previous day and just really starts to take off. I mean, makes a huge profit for the traders who had bought off of that 20-day moving average. And what's cool about this as well, you do have some gains that follow in the days ahead and makes for a really great trade there. So this was a big time opportunity there. You know, when you trade these, you're not necessarily looking to get in at the first candle here. That's not really the premise behind the trade. You're really trying to get in on the gap up, and then when it starts to rally thereafter, you can get in towards the end of the day or in the following day. But usually there's some good profits that can be made. And then for the last example, let's go ahead and look at NVIDIA, and this will take us back to April of 2017, so you can look at it on your own charts if you want to. And here, this is what we were talking about, having it happen at the end of a reversal or at the end of a sell-off, and then the subsequent reversal, hitting its lows, and then you have not really a gap higher on this one. Actually, it goes a little bit below the opening price and then shoots higher. But that's what I'm talking about, and that's what a lot of people really have a hard time getting their mind around, is that the stock market doesn't follow textbook theory. You have to kind of look at what is the spirit of what it's trying to say. What is the candle is really trying to tell you? That it's a reversal taking place here. And so you have the reversal, it's moves higher, and it's probably, compared to the two other examples, which were near textbook examples, this one provided the best reversal yet. I mean, you have a multi-day, 6-7 day rally, it consolidates some, and then it just keeps going higher and higher and higher. I mean, this was your telltale sign here to get long on NVIDIA. I mean, look where it goes from there on out. I mean, it just never stops. So this kicker pattern created the reversal that allowed NVIDIA to go from like a $95 stock all the way up into the 150s within a matter of a few months. Now, the next pattern is the bearish kicker pattern. And the first one's going to be TRV. We'll go ahead and move on to current day. This actually happened the day that I filmed this here. And what you have is some consolidation. It's kind of at the highs of a recent sell-off. It bounced back. You could say it's trying to form a bear flag. However, you have a rally higher the day before. It doesn't close at the highs, but it doesn't have to in order for it to be a bearish kicker. People will disagree with me on that, and that's fine. But the possibility of ever finding a bearish kicker pattern that matches the textbook is like slim to none. It just doesn't really happen. So rally higher, and then the following day, which is today, it gaps below the previous day's opening price and then sells off thereafter. So my guess here with the Travelers Company, TRV, is that we're going to see further downside in the days ahead. And what makes this one so much more interesting is the strong volume that the sell-off takes place on. So keep an eye on that one. My next example is going to be Facebook. Now, this is a little bit different one, and you might not spot it initially, but it is a qualified bearish kicker pattern. And this happened back in March of 2018, and there was some news that happened with it too, with the Cambridge Analytica scandal. And it gaps higher, and then the following day some news came out and it gaps way lower, I mean much lower, and has a subsequent sell-off that lasts the rest of the day. Now, would that be a good time to get short once you get the confirmed bearish kicker? Well, in this case, for sure. In most cases, yes, that is true. And as a result, Facebook has a significant sell-off for many days to come, taking it from where it closed at around 172 all the way down to like a 150 area. So really an incredible bearish kicker trade setup there. And then finally, we have Tesla, and this one's going to go back from October of 2017. And here you have it where it's starting to break out, and it actually gives you a nasty head fake. So the breakout and then the gap below the previous day's opening price. And once again, you do have some shadows there, but almost every one of your bearish or bullish kicker patterns are going to have shadows. You just can't find them without it most of the time. You're asking for 2 days where that doesn't happen, and it just, you don't find those. So rally higher, and then the following day, gaps below the previous day's opening price and sells off. And now look what it does. It goes from a closing price of around 351, and it continues to sell off all the way below 300. So that's a really good trade too, almost like a 20% opportunity there. And that's it. Those are about 6 examples that I just gave you of a bullish kicker, 3 for a bullish kicker pattern, and then 3 examples for a bearish kicker pattern. And they make great trading opportunities. They let you know, especially if you see them in the indices. That's very important, because if you see in the S&P 500 towards the top of a rally, that's probably a good sign to start booking some profits in your profitable positions and maybe tighten up the stops on others. And in the same thing, if you are seeing the market in this huge meltdown, and then you have this big panic sell off, and then the following day you gap above the previous day's opening price, and then you see it start rallying thereafter, that's a good sign that the bottom's probably in as well. So I appreciate you listening, and have a great day. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks, and happy trading.